many sights to see. And when I look in my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Tuesday, a little bit after 11:30 here in Honolulu, Hawaii, May the 4th, and this is the Daily Report. Gold is currently trading under significant pressure this morning. 1172.33 is our current price. It's down about $9 to $10. It has been down as much as $16 today. In today's reports, we're going to talk about adjusting our stop placement, where I think this market may go short term, interim term, and my recommendations for the day. Now, in terms of fundamentals, a very, very strong U.S. dollar, sharply lower crude oil prices, that tended to put some pressure on the downside of the gold market today. They closed moderately lower. It was seen to be as profit-taking pressure from recent gains. And what we did see was that there's no significant chart damage that was inflicted in terms of gold and the technicals. This is according to Kitco's analyst Jim Wyckoff. The U.S. dollar hit a fresh 12-month high. The euro dollar hit a fresh 12-month low. And the one thing that we have to realize is that although they reached a tentative agreement over in Europe concerning the debt bailout for Greece, traders right now are concerned that Spain may be the next to have a very, very strong debt problem. So we are seeing the buy the dip mentality. In other words, when we see weakness in gold, we see it get pushed down to a certain area, and then again we see it get moved back up as fresh buying comes in to the market. What we are looking at here is a 1-hour U.S. dollar gold chart, and I want to show you something that I find pretty significant. This was the sell-off that we hit 3, 4, 5, 6, 7 hours ago. It started with a pattern that is a typical pattern in candlesticks. This is the engulfing bearish. Extremely strong confirmation. And the following candle opened at this point. It closed higher, but it did reach a low. On the following candle, it made another low. This was that double bottom right around 1167. Now, since then, we have had some buying come into the market, and as I say, it's currently trading at 1172.33. What is that telling us long term as well as short term? What that tells me is that the players who are looking at this market long-term from the long side are bargain hunting. In other words, when the market comes under pressure, be it profit-taking, be it a piece of fundamental news that doesn't drastically change your overall view of the market, but at the same time changes a short-term perspective, you do get fresh buying coming into the market at the point when you reach a new significant low. Now, I have gone and I've put back our daily chart. We're going to also look at the euro-dollar gold spread, because that's something with the euro dollar under pressure that hasn't seen these significant drops. We're going to talk about that at the close of this program. But this is a classic engulfing bearish. It's a 2-day reversal pattern, and in order to actually take that pattern, you must then get confirmation. Confirmation on this particular pattern, meaning a 2-day pattern, would be on the following day. You would have a marketplace that would have to open and close lower. It would have to be a black candle, and it would have to take out the low of this day. Now, what we are looking at is the euro-dollar gold spread. And as you can see, it is currently trading higher on the day. And that is mostly due to the fact that the euro dollar is under so much pressure and the dollar is gaining so much strength. So that continues to trade at record highs, actually breaching 900 euros per ounce today, currently at 899.53. Traders, what I'm looking to do is on the next point in which we look to add positions, we are going to be adding equal positions of euro dollar gold spread and US dollar gold spread. Now, currently, we have not been stopped out. Our stop is still sitting at 1165. But traders, here's what I'm recommending. I do want to lock in the profits that we have. At the same time, because we have now seen this pattern, this is a typical engulfing bearish, to take confirmation, in other words, to actually take a sell signal on that, what you would do is on the following day, if you get a confirming candle would be a black candle with a lower low, a lower high, and would typically have to take this out, then you would actually see a short-term bearish reversal. Because I do not want to give away the profits we've worked so hard to earn, my recommendation is to trail our stop to 1170. That's 1170 on a protective stop. I understand it's extremely tight. We're currently trading at 1172, but here's my feeling. If the market is going to genuinely bounce off this and begin to move higher, our stop will hold. If the market wants to move under a little bit more pressure, a little bit more profit taking, my sentiment is I want to lock in the profit and reposition ourselves either on if it stops us out and moves higher, we'll reposition on a breakout. If it stops and moves lower, we'll look to see at what point it really makes sense to enter. Now, what I've done is put up a very, very short-term Fibonacci retracement, and what I'm looking at is a retracement from this low here to this high here. In other words, this is our 100, this is our 0. Interesting in that our 23% is here, and our 32% retracement is right where that low hit. So, because of that, I think that we probably have washed out down on the downside. However, by moving our stop up just a little bit, we should be able to protect ourselves in case it either wants to move to the 50%, which would be 1157, or the 61%, which would be 1149. Again, traders, move your stop to 1170 on a protective stop, maintain your long positions, and we'll see what the market brings over the next few days. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. As always, wishing you good trading. Bye-bye.